Hello and welcome to the latest edition of Citrus Bites from our offices in Sevenoaks. Today, going to change things a little bit. I'm going to talk a tiny bit about the economic situation to start with, and then I've got a special guest today. So I'm going to spend a little more time asking some questions to our special guest. So let's start with all the big news at the moment. Let's start with inflation. What are we seeing with inflation? This is something I've been talking about for many months now. Well, CPI, so Consumer Price Index inflation, recently announced over the last couple of days that on a year-on-year basis, we are flat at 8.7%. Now, some may say, well, that's good news, isn't it? It's flat. It's not carrying on going up. Unfortunately, people really expected CPI inflation to come down month on month. Why? Well, that's because CPI includes some more volatile things like food and energy. And we are seeing decreases in energy. For example, again, those of you that, perhaps fill up cars with petrol, you've noticed that at petrol pumps. So CPI is stubbornly flat on a year-on-year basis at 8.7%. But one of the things I've talked about before is core inflation. I've talked about why core inflation is so important. So core inflation strips out those kind of volatile areas of food and energy. So it's seen as one of those kind of really stickier bits of inflation. So quite hard to get out of the system once you've got core inflation. That's where the issue is. So core inflation year on year, that's gone up from 6.8% on a 12-month rolling last month to 7.1% in May 2023. That is the highest figure since March 1992. Now, I might hear you say, why all of this news about, the Bank of England base rates and the impact that's had on interest rates? Why is that happening? So the Bank of England today announcing the 13th consecutive rise in the Bank of England interest rate, and yet inflation is still going up in spite of these mortgage payment increases. I think we've heard, the average homeowner with a mortgage that's come to an end when they're transferring onto a new product, they're seeing an increase on average of £3,000 a year in their mortgage payments. So where is this inflation coming from? Well, here's a couple of stats for you today, for those that like their statistics that you might find surprising. People are still spending money. April 2023 was the 9th consecutive month of an increase in the volume of new car sales in the UK. So we are still buying new cars. On top of that, the Office of National Statistics announced that the airfare increases from April to May, month on month, were 20%. Well, I don't know about you, but when I've been speaking to people who've been on in our plane recently, what they've been saying to me is the planes are still full. So we're seeing these price increases. We're seeing price increases, whether it be new cars, things like airfares, and yet as consumers, we're still making those purchases in spite of all the news that you're hearing that would lead you to believe, obviously, from the rhetoric that everything is bad news. So clearly things are still happening. And therefore, in spite of all the news about the mortgage ticking time bomb you're hearing and the impact that's having on homeowners with mortgages, people are still spending. And so it's a great chance for me to now introduce this month's guest to ask him more about what he's seeing in house prices in terms of the valuations being applied to those house prices. So I'm delighted to be joined by Matthew Camber, Managing Director of Countrywide Surveyors, to Citrus Bites today. Matt, thank you so much for joining us. A big welcome.
Yeah, thank you, Rich. Thank you for the opportunity.
You're welcome. So for those that maybe don't know Countrywide Surveyors, Matt, should we start with that? Tell us a little bit more about Countrywide Surveyors.
Yeah, sure. So Countrywide Surveyors, we are a national company. So we have surveyors based in England, Wales, Northern Ireland and Scotland, operate under a different name brand in Scotland. But we have nearly 500 surveyors throughout the country. And our main role really is to carry out valuations on behalf of lenders, which is probably what you're more interested in today, and surveys for the actual customer on one to another condition of their property. So we have a number of contracts with a number of lenders where we get sent work. When a mortgage application comes in, requiring a valuation, and then a valuer makes contact, comes around the house. There are 4 or 5 big companies, of which we are one in the UK. So quite often it could be one of my surveyors coming round your house to value your property.
Fabulous, brilliant. Thanks for that, Matt. And so, the Bank of England have just announced the 13th consecutive interest rate rise to the Bank of England base rate. And we've heard so much over the last few weeks about the impact that's had on mortgages. So I'm fascinated to know, what is it you're seeing with regards to house prices?
So I had a look back on 2022 house prices in comparison to what we're seeing in 23. And obviously, you're probably more interested in London and the southeast of what's happening specifically. Interesting, really. So just to put it out, 2022 average prices were around about £509,000. Now, bearing in mind, these are prices that our surveyors are reporting as the valuation of the property on the due evidence they collect, etc., etc. There's no forecasts here, and there's nothing else apart from the work we get and the data it gives us. So 509,000. Now, if you compare that now average house to 2023, it's gone down to 489. So yes, it has gone down. And we all know 2022 was a weird year. We had 9 months of house prices going up, really, really buoyant and busy. And then good old Liz Truss put us into a situation where we had 3 months of what on earth is going on. And it has slightly recovered from there. And I think we'd all be rather foolish to look at house prices and think that they were going to grow forever. But on a positive point of view, they haven't really come down that much. And you look at the different types of properties they've got and which ones are coming down more than others. And there's a slight spin on it, Richard, as well, really, because look at detached houses in the southeast. Again, it's come down slightly, not a lot. You know, it's less than 3%. But flats have actually gone up. So flats priced in 2020, the average price that we're recording for properties that we value is up on 2022 prices. Now, that can be a number of factors. It can be that the volume of work that we're getting and the type of properties we're seeing are at a higher upper end. It may be that. So you have to bear in mind these, again, are prices that our valuers are recording for those lender clients that send us the work. But I thought it was a strange situation where every other sort of house type is slightly coming down between 1% and 3%, but flats have actually gone the other way. So,
and it is quite remarkable, actually, when you think about, you know, we're hearing stories such as the average 2-year fixed rate mortgage has just gone above 6%. Average homeowner, when their mortgage product is finishing, is paying at a minimum sort of, I think it's an average of £3,000 a year more in mortgage payments. And yet you're still seeing that kind of movement take place
yes.
with some of the properties. Matt, is there any difference you'd be able to identify between kind of the residential versus the buy-to-let market? Or I don't know whether your values would typically know what purpose the property is being used for at the time of value.
Yeah, they do upfront, because obviously when they go in and value a property, obviously they've got to record not just the value of the property, but the likely market rental achieved. So we have got contracts for specific buy-to-let lenders as well that we go out and do those valuations for. And the one thing I would say is obviously don't read the Daily Mail, and also don't believe everything you hear in the press, because there's a lot of doomsayers out there. There were people saying that the buy-to-let market is dead, it's over. Quite the contrary. You know, the proper landlords out there, the serious landlords, are still buying property. They're still refinancing. They're still looking for opportunities out there, and we're seeing it in the volume of work that we're getting on buy-to-lets. And those properties are still holding up exceptionally well. There's no real difference we're seeing in terms of, you know, properties that are let out and are maybe sold from one landlord to another landlord, deteriorating in value against a normal residential at all. No.
Interesting. And it's really great to hear from you, Matt, because one of the things I notice, and I don't know whether you can throw any light on this, but I see sort of stuff get announced from, you know, the Nationwide. There seem to be two quite prominent house price indexes. One is the Nationwide and one is the Halifax. I read about them the most. The thing I find bizarre is they never seem to agree on what they're saying. Why is that?
I think they're only obviously clearly doing it from what they're seeing with people who are taking mortgages out with them. So two different sort of lenders, two different sort of appetites, let's put it that way, out there in the marketplace. So, and I suppose from a geographical perspective as well, you know, certain lenders will obviously have a preset sort of area where they're more attractive or competitive. And obviously Halifax and Nationwide, yes, they cover the country, but Nationwide in particular, because it's a big client of ours. Not so much of a big lender in London and the southeast versus somebody else like, for example, Santander. Not giving any trade secrets away. So that's just the way it seems to work out with different lenders.
Okay, thank you so much for explaining that. That's helpful. And then, so we've got a better understanding about what's happening now, Matt. What are you predicting over the next 12 months? Get your crystal ball out. What do you think?
Tough one. I mean, you alluded to the fact that 13 base rate rises, and we've had a numerous number of mortgage rates change. And that level of uncertainty is never good in our industry, full stop. At the moment, despite the fact that the interest rates have been going up, it hasn't stopped people buying houses. And clearly, there hasn't been a real substantial deterioration in house prices. And I expect it to continue that way. I do. If we are going to experience any more Bank of England base rate rises in the next 6 months, then that could change the view of it, i.e. if it stops people wanting to purchase their property or delays them making that decision, and somebody clearly is in a position where they need to sell their prices, it will put pressure on the house prices. But again, I'm not a doomsayer. I'm very positive about it, and I honestly don't think it's going to have too much of an impact this year or even the start of next year.
Okay, interesting, Matt. Thank you so much. Look, I could have loads more questions for you, actually, but mindful of the time that we have today. So I do have, however, in true customary style for Citrus Bites, I do have a couple of questions for you. One of which was set by our guest, special guest last month, and then I'm going to give you the opportunity to set one for our next guest, whoever they may be, next month. So our guest last month posed this question for you today, which is, what is the bit of your job you enjoy doing the most?
I think it's the sheer variety of what I get to do. So, in other words, I get to spend a lot of time talking to lenders, finding out what they're doing, what they want to achieve in the market over the next 12 months, 2 years, how we can help them, as well as spending time out there with my relevant different teams, spending out time going out with surveyors, seeing what they're having to do on the day-to-day, in our booking centres, with the people that are on the phones, talking to customers, going and seeing regulatory bodies as well. It's a huge variety. I'm in a really lucky position, you know, to say that. And clearly you can see me today sitting in a hotel room. So I'm clearly away from home a lot as well, which, yes, can have its drawbacks, but no, love it. I really do love the opportunity I've got and the role I'm doing.
Thank you. And I'm sure some of the viewers would, you know, I always thought about when you see a house go on the market locally or a property go on the market locally, obviously the thing you do is, oh, it's a shame, you know, going to miss the neighbours, before you dash home and then try and find a line to see the inside of it. So your team, there we go. They get to see so many different houses and properties, but thank you. And okay, so your chance now. So you've got no idea who next month's guest is going to be.
Okay.
What question would you like to set them?
Right. What one piece of technology would they be looking to introduce into their business over the next 12 months and why?
Wow, what a brilliant question. Haven't had a tech one before, so that's fantastic. Matt, that's brilliant. I will make sure to ask that next month. Really appreciate your time today. I know how busy you are, so thank you very much indeed for joining us.
Thank you, Rich. Thank you very much. Much appreciated.
Take care.